Okay. My name is Whitney with RedBridge Capital. I'll be joined with one of the NOFT traders that you can find on the website here. And these are folks that I have that have purchased the NOFT toolkit and the education that I provide along with it. So there's a lot of hands-on. And this is an example. This webinar today will be an example of the type of education that you'll receive. So it's not just about buying an indicator and putting it on the shelf. It's about learning exactly how to benefit from it. I just opened up your mic, Bill. If you're there, if you can give me a sound check, everybody. Let me know if I'm coming through.
Hello.
Hi, Bill. I guess
Hi there,
I'm coming
Kai.
through
How are
okay.
you?
Good. Good, thank you.
Good.
Bill's been with me now for about 6 months. Well, not with me, but he's been an owner of the NOF for about 6 months, and he was one of the very few who reached out to me for additional assistance, and so this idea has kind of grown that way, where anyone who is having any kind of difficulty in interpreting the numbers and exactly how to anticipate these trade locations and take the trades, if they reach out through snapshots of their trades, email, Skype, I'm very available and willing to help because I have an end goal in mind. I didn't set out to develop, and let me just put you on mute for just a second there, Bill. I did not set out to develop this NOFT to sell. I developed it for educational purposes. So I've done private mentoring over the years and education with a group called Global Trade Room for the last few years, and I was the main educator and would teach folks about order flow and bid and ask analysis, and obviously confirming your patterns in your candlestick charts, your supply and demand, your Fibonacci levels, your MACDs, your oscillators. Those are all wonderful tools, but they're only partially correct. So I've really had to help people understand how the market really works, and in so doing, I would teach people exactly what I look for. I mean, to the, down to the, period, start to the period, start to end, and exactly what I would do to look to get into a trade, where my stop would be put, where my targets would be, where I would hide my stop, where I would take partials off, all the way through, from examining from the longer term perspective down to the absolute, this is how you enter into a trade, and here, this is how you confirm. And not very many people were picking it up because what I was using was a footprint chart from the largest competitor out there called Market Delta, and it was quite expensive for most. I guess it's about $215 all in a month. And they weren't willing to do so because they still saw that I was doing a lot of extra work. I'd filter out these large block trades. I'd identify these levels just using the numbers and not indicators. So it just got to the point where I was, it was like, listen, let's just teach this as though I'm teaching a 4-year-old. And then it got to the point where, hey, I wonder if I can, what I'm teaching, because it wasn't found, I could not find how I see the market. I had to end up developing it myself, and so I found Ninjacators, who is the owner of the NOFT, and they're the support and the developer and the programmer behind this. I just have the intellectual property, and how I'm using this is to develop a group of traders to be funded with an investor backing that I have, and we're going to start a hedge fund and a prop firm, and just very similar to, if you've never read the Richard Dennis story in the Turtle Traders, very, very similar. So I could literally sit there and say, this is the only setup that I want you to take, and I want 10 to 12 different traders or more looking at different markets all around the clocks, and that's all I want you to do. And it becomes that simple if you all have the similar strategy and system and the right method and the right mindset. And of course, when everyone fails, at every single level in the markets, you do fail at some point in order to grow. There's someone there who's been there, such as myself, to provide that support. And the more people that I train, such as Bill and a few others that I've asked, and then they've You know, a lot of people are not willing to give back, by the way, to share their knowledge. Bill, who's joining me now, is very, very helpful and thoughtful, and I appreciate that, because if I didn't give back when I was doing the education and mentoring and writing out exactly what I looked for, I wouldn't have this tool right now. I would not have it. It would just be me trading this strategy. Now that I've seen the success and of the adoption of this strategy, and it's a little easier to understand because there are a little bit of bells and whistles to it, I have an opportunity now to take it that much further. Okay? So that's where I'm coming from. Is there anyone in here who is hearing my voice for the very first time? And I'll bring in the question box for you all to see. And what I'll do is I'll make your names anonymous so that you can comfortably ask any questions that you have. And I see a question that's just coming across, and it says, can this be used for the market in Singapore? And I had a very similar discussion with the internal folks over at Ninjacators. So I'm training the entire that group over there who built it, how to use it. And there's a difference. There really is, and I have found there is a big difference between a programmer and an actual trader, and a trader that has been there trading large size as I have. So for those that have not been here before, you can go to RedBridge Capital. If I put that in the chat box yet, I think. Yes, I did. You can go to About Me, and here's my story. Who am I? Got involved in the markets as a fundamental analyst, doing deals, putting deals together in venture capital and private equity. Went into investment banking, went through the professional training program in 1999 through Swiss Bank, who is the largest investment bank in the world, and they have also the largest trading floor in the world, 1,500 traders. Went through Bear Stearns, left Bear Stearns 3 days after Christmas in 2006. Went to one of the largest prop firms. Well, excuse me, one of the largest HFT firms behind Bloomberg. They supply all the data for the hedge funds, and I got onto their Ascent Capital desk and traded New York Stock Exchange listed stocks, and was able to short the entire financial markets all the way down. And then I went and I said, the restrictions came in where you couldn't borrow and short those anymore, so I decided to leave and do this on my own. And in so doing, I became a retail trader, and I went through the very same struggles that you are all going through. So I went through different indicators and mentors and programs and you name it. And I found that the further and further I got away from my true professional training, which was just basically looking at order flow, the worse and worse my trading got. So this really helped me to come back to my roots, to really help you understand the institutional level bid and ask analysis that I'm going to present here today, and showing you how to identify trade locations and trades with very minimal risk and better higher probabilities, because it's all about trade location. And your success is eminent as long as you do the work. So at the very end of the day, you can go ahead and purchase the system that I've developed, and it comes with 30 hours of support of on-demand video, live training. You can click here for details, and you'll purchase that through the Ninjacators. Okay, so let's get started. I have set up here, and Bill, I'll open up your chat, your mic again. If you have anything you'd like to add, please feel free. But what I want to do is give you all the, what really makes a chart. It's not just green is prices going up, red is prices going down. There are numbers that make up. I'll put them on mute again. Bill, let me know when you're all settled. It's not just that price action is going up or price action is going down. What you need to understand is who initiated that movement in the market for it to go up. Who initiated that movement in the market to go down? And the fact of the matter is it's large orders that are coming through. And if you can identify where those large orders are being initiated, those will be very, very important reference levels, okay? So I want to look at what I have set up here for you is on the left-hand side up here. Let me put a little cursor here. On the left-hand side, I have this is the crude market that I'm looking at right now. And this is the time and the price or the print and the number of contracts. Can everybody see that okay? On the very next one, I have the time, price, and then I have a filter on the tape. And I am saying I don't want to look at the 1s and 2s and 3s. I want to look at something that's larger than such and such. And that's all I want to see, okay? And then I have another one. And this one here, I want to identify the real large players. And what I can see from that is I can identify just looking at these numbers where this candlestick chart, where the prices are going to go, where they're going to have a reaction, and where that level is going to have that reaction is where I want to do business. Okay? So this is something that I did at the prop firm before something that was called the footprint chart. Is there anyone here who doesn't know what a footprint chart is or a bid and ask volume ladder? I assume everyone knows what the DOM is, depth of market. Am I correct? Yes, yes? Okay. Remember, you're anonymous, so you can go ahead and feel free to type in if you're not familiar with a footprint chart or reading time and sales. Let me know. But it's basically the bid side is the buy, sell side is the ask. TPO, GOMI, sure, whatever you want to use. For your market in Singapore, the question okay, I addressed this question yesterday, as a matter of fact, because someone was looking at the 6E, and it's been moving slowly within a range for the last 5 years. So I haven't traded the 6E, and it's getting closer to an opportunity. But the fact, all you need is a bid, someone willing to buy, an ask, someone willing to sell, a price, and recording of volume. Okay? And you can do it just with price, just with bid and ask. Okay? You can do that. But to find the transparency in the market, to see how aggressive they were being in accumulating or distributing, that buy or sell, that will give you more transparency into the market that you're trading and looking at. So in other words, when you're looking at spot Forex, it's mainly price action, isn't it? Or it's the volume that you're seeing from the dealer that you have your account with. But that may not be all the volume. It can be a snapshot, but it's better to have the whole picture, because I'll tell you why. Because the dealer itself has all of the information. The market itself provides 100% transparency. You just have to have the right tools to be able to interpret that information. Okay? And that's why the closer you are to the exchange, the more expensive the data is, the more expensive the memberships are, et cetera, et cetera. The further you get away, like for us, they're offering you free data and free platforms, right? Or next to free, $70 a month, something like that. Well, there's something to that. Real data will cost you about $1,000 a month, if not more, as a membership price. So imagine the difference between what you get for free and what you pay for $1,000 a month. And just know that you're at a limitation, okay? So you can use this with any market, anything. I've actually used this same process to buy and sell fine wines like Lafite Rothschild, buying private collections and reselling them. And I would do analysis on the pricing and then the volume and it works just like you do in an auctioning process at an art auction or a classic car auction or anything that has a bid, at a buyer and a seller. Okay. So if there's any questions about that, let me check in with Bill and see if he has anything. Bill, are you all settled? Are you there?
Yeah. I know, he's making a little bit of noise there.
Yeah, it's okay.
Not too loud.
That's all right, no problem. No problem.
I had a very late morning, I guess I should say, very early morning, and so I'm just a little on the tired side.
No problem. No problem at all. I guess what I could ask from you, Bill, is when you first heard, remember, we've only met each other about 6 months ago, and I like his position where he really came to me with not much of an understanding about the footprint, but yet he had been trading for about 10, 13 years, I think it's about 13 years, but he still never really used time and sales and the footprint and order flow. Is that about right?
That's correct, yes.
Okay. So it's really good to hear from someone who has traded with the indicators before and the price action and how their success rate during that time versus, the 10, 13 years of doing it that way versus just 6 months ago. So, Bill, if you have anything to add in that, that would be great.
Sure. What Kai says is exactly the truth. I would have, weeks and months of success, and then I would have losses. And the biggest challenge or the biggest goal we all have as traders is to try to establish consistency and consistent profitability. And I was very challenged / confused as to why that was happening to me. I had studied with several mentors. I had purchased, unfortunately, many courses and systems and methodologies, and felt I had a pretty decent handle on the market and understanding the market and understanding market flow and so forth. But why was it that I was not able to consistently be profitable in the markets? And so I was convinced I still was missing some key information, and indeed I was, until I found the Ninja Order Flow Trader toolkit, because as Kai says, and it didn't really make complete sense to me when he made this statement, which he made earlier, and that is that the market is 100% transparent. And really what he's saying with that is that if you have the correct tool to read and understand the market, it's like an open book. You can see where the buyers are, and you can see where the sellers are. You can see where they are in force, and you can see where they are in weakness. And until I had that understanding and until I had this tool, honestly, I was trading with a song and a prayer, with slow lagging indicators that we all have and we've all used, and it just wasn't providing that consistency that we all want and need and look for. When you turn the lights on for business, this is a business, and you're opening up your store. You've got to be able to make some money every single day somehow, and it was difficult. It was difficult to pull that off. So I have realized unbelievably an incredible success as a result of learning how to use the toolkit, applying it correctly, interpreting the information correctly, and then executing. And if you're struggling, if you've had good success and then not, and you're wondering why, I'm giving you the answer right here. The seasonality of the market is going to trip you up, but there's nothing that can be hidden from you when you have the toolkit, the footprint in front of you, because it's pure filled orders. and there's no smoke and mirrors, there's no hiding, there's nothing, there's no tricks, there's no, I mean, there's plenty of tricks that traders play, but the information that's provided in its raw form is showing you exactly who's involved at what particular time.
Thanks, Bill. One of the questions, I'm not sure if you can see it or not, is, I know you didn't say this, but someone's asking, are you saying that you don't have bad days anymore?
Great question.
And maybe you can just elaborate on that.
Sure, be happy to. What I am saying is that as a result of the precise entry opportunities that the footprint provides, my losses are significantly minimal. I have anywhere between a 5 and a 7 tick stop in crude oil. And we all know how volatile crude oil is. We know how difficult crude oil can be to trade. If you've ever looked at crude oil, if you've ever tried to trade crude oil. If I have a losing day, which honestly, the answer really is I normally don't have I don't have losing days, but if I do, they are minimal, and I'm talking really minimal in comparison to losing days of the past. And it's because of the fact that you're able to be so precise with an entry. And if I simply called the direction wrong, or if I simply got in at the incorrect spot, I have my 5 to 7 tick stop. I just take my medicine. I get stopped out. I don't move my stop. Do not move your stop. Cardinal sin. That's another thing that this has really helped me to be able to do, is to understand when it is a correct time to get in and where that correct time is. So in answer to your question, sorry, long answer, but honestly, I have minimal losing days, and if I do, they are very small.
Okay. What about money management?
Not sure the question. I know what money management is.
Money management basically is controlling your risk, identifying your risk before you take a trade. And, and as he mentioned, never moving your stop and taking the stop, but your stop is mitigated to minimal risk, even in something as volatile as crude markets. That is money management. Okay.
Yeah.
Okay, so let's get through here real quick. I just drew a couple lines, and I basically just used the information given to me in the tape here versus looking at a pattern or a setup, okay? So what I identified was potential support and resistance. And how I did that, first off, is anyone not familiar, or does anyone here use time and sales currently to confirm their trades? Or to identify levels with? Or are most of you just using indicators to do so? Indicators? Okay. Someone uses time and sales, level 2. Okay. So here's time and sales, no filter, small filter, large filter, right? Here is time and sales, level 2, right? This is going to give us the bid and the ask. So let me identify that for perhaps someone that doesn't. This is the bid side. This is the ask side. This is 7 by 2, 4 by 6, 5 by 4, right? And see how there's different numbers moving as well? It's 7 by 10, 8 by 12, 8 by 13, 12 by 8. You obviously have to be pretty fast to do this in real time, but you do get comfortable with it. And then this is the depth. This is telling who's interested at what levels. Now, back when I was using just time and sales and level 2 data, this information was more solid than it is these days. There's things that are done with the algorithms and the HFTs and dark pools and iceberg orders and stuff that these limit orders are not really that important anymore. They can give you a sense, this limit order here, this depth, is basically this depth Let me give it a different color. This depth here is here, okay? Depth on the bid, depth on the sell. You can see that they're moving away, a number away from the current print, which is basically a 1 by 1. So it's really important to understand that these are somewhat misleading, just like price action is misleading. And has anybody been here for my discussion on how to look at the market like an iceberg? But our side time and sales not as detailed. You have not? Okay. I can go in that in just a moment. But what I identified here is levels using just numbers. Forget about the colorful, beautiful charts, right? Because the market is not made up of indicators. Indicators and even volume was only really around since about the late 80s, 90s, where order flow has been around since the very beginning. Everyone should read and reread Reminiscence of a Stock Operator with Larry Livingston. There's a lot of very fine, detailed information about what it takes to be a successful trader, and that should be your Bible that you earmark all over the place. So the numbers that I identified here, I took 78.41 from 78.41 from here, these two aggressive buys totaling 14 and 21 together, 35, and I drew that line there, okay? And then I took the lower line, 78.27. That was here, this block of buys. That was when we were up here, 78.27. And then I took this line up here, which is 79.14. I took that from this large buyer here at 79.14. Now let me ask everybody here, if a large buyer is up here at 79.18 or 79.14, what is he doing right now? Or what you think he may have done already? He sold, got stopped out, maybe reversed his position. He could have exited, yes. He could have. Now, that number, 79.14, that number will indefinitely have an effect on these prices. It will, as the market comes up to this price, the market will pause there. And the market, at that opportunity, you have an opportunity to short, to wait for a retracement to get long after that, or if it comes through to the other side, you have an opportunity to wait for the retracement back to that 79.14 to get long. So I have just identified for you, just using time and sales, your level that you'd be interested in doing business. Now, you can do something down here. There is something you can do down here. So you notice how price action was kind of staying around here for a bit. This is just a 3-minute chart, by the way, not a 30-minute or anything, but this is about 30 minutes right here. This is 30 minutes, excuse me. And it's just going back and forth, back and forth, back and forth. And notice how the wicks are basically here to take out stops. So is anyone here that buys breakouts and sells breakdowns? Anybody here do that still? I'm asking because the majority of traders out there do that. Well, should I say the majority of the 90% of folks out there that fail still do that. What you have to understand is this price here in relation, put it into context. What is this price up here, this price action up here trying to do? And is it expensive or cheap relative to where the numbers are trading around, balancing? And when they're balancing, which is the idea of the market, the efficiency of the market, this is what the market wants to do all the time. Because buyers and sellers are transacting business here. And there's enough time for all the buyers and sellers to get done what they need to get done, right? Before the price moves away from this area. So what you can do is you can identify these levels all over the place. And I'll show you, I'll go back. And I'll identify this level here where it's traded around. Which line can I use? Array line. This one here, out into the future, and this one here, out into the future. Shoot. Ray line. Is that it, or extended line? Oh, anyway, you guys get the idea. Basically back up at $80. This was from yesterday, 11/3, 2 days ago. 2 days ago, at $80, there were buyers and sellers that got together. This area is considered balance or value. That's telling us that at that period of time, this was considered value. At some point, the market got too expensive relative to this value, and therefore there was a short opportunity. And now, as it came down through here, it created a next value level. See where the market stays here overnight and creates a level, and then it auctions further. And it does it again, auctions further. That's called the market moves from balance to imbalance to balance to imbalance to balance to imbalance. That's all that it does. And it's searching for value through price action. So all we want to do before we put on a trade is identify a price action relative to the value. Is everybody getting that? Okay. Yes? Was that a yes? You can use ATR, anything you want. Anything you want. And I'll talk about where all of those indicators make sense. So the fact that it's created opportunities both to the downside and it's explored the prices being fair. Let's consider this as a fair price, 78, or agreed upon price, 78.34, right? Exactly. When prices rotate around value, you can trade the edges. But let me ask you this. If this is value here, value area high, 78.40, and value area low, 78.26, you'd have to be awfully good to trade these value areas, right? Now, what if you can identify a much larger value? How about 78.26 all the way down to 77.81? That's better. That's a point. Isn't it? Yeah? No, not a point yet, but that's a little better. Now you can trade the edges. See that? Edges here, value area high, value area low. You see that? Let me know, as I've come to the understanding and realization after doing this for a little while that I assumed that everybody knew what I was talking about when I'm talking about time and sales and level 2 and footprints and trade imbalances and things like that. And I've come to the conclusion that it's actually, I've done a few polls. And one group that I was with last week, not one single person in that group used time and sales to confirm their orders. Not one. So 100% didn't use. But yet 63% of them used indicators. And I've done this poll now over the last few months that I've been teaching this here in this manner. And it come to, on average, about 60% of the people attending are not very familiar with order flow. But yet they're all familiar with the high failure rate, the 90, someone said even 95% failure rate in day trading. But yet they're still using the most common denominator out there of that failure, which is indicators. And all I'm trying to tell you is you can use your indicators, but you need to confirm with the reality of the market, which is the order flow. How aggressive are the buyers being? How aggressive are the sellers being? And you don't want to step in front of a truck and get run over. That sounds pretty simple, doesn't it? So if you can identify value, you win. And I was saying the first person to identify value wins, because then you have something to measure the current price against. So this is simply clearing all these stops. Now there is an opportunity to get long in here based upon this value area. Now, do I want to get long up here at 78.57, 78.50? If the best areas to get long are 78.35 and 78.27? Or is it better to wait until we come in to that level of fairness, buy it where it's more fair priced, not expensive, not too cheap, and then get long? And we have an obvious area of 79.14 as our target. Now, I've done this for you now, all just by using time and sales. And because there's no indicators or anything on this, but because of the understanding of the market that I have, it eliminates the need for all those other tools. Okay? So that's a very, very good question. Excellent question. Does time and sales tell the whole picture? No, it does not. And I'll tell you why. But let's just let's see if there's any questions, or Bill, if there's anything you would like to add. Because I'm asking Bill to interpret basically what I'm saying. I have so much stuff in my head, you guys. It's nuts. Sometimes I can't sleep. There's so much going on in my head. So it's nice to have a filter. And Bill, thank you for being my filter today.
Sure.
If you could make sense of everything that I just went through, that would be great.
Well, I just like to say to everybody, the first time that I heard that very explanation with regards to the market and value and what the traders are constantly in search of, is the market balanced? Is it imbalanced? Are they attempting to become balanced or imbalanced? What story is the market telling me? These are three questions Kai teaches and suggests as we're constantly asking ourselves as we're staring at the market, as we're in front of the screens. And that just made incredible sense to me when I heard it. I had never had it explained to me that way before. And it might take a little while to sink in, but definitely give it thought and give it time to think, to sink in, if it's a new concept to you. I look at the market a completely different way now, and than how I was taught. And it's kind of, unfortunately, like you think you want to play golf, and so you go and you pick up the clubs and you swing, and you don't know really what the heck you're doing, is the bottom line. You don't understand anything about follow-through and torque and what the hips can do and just all of that stuff. And, honestly, it's very similar with the market in a sense, where we say, oh gosh, this looks cool, or wow, I'd love to sit at home and make money pushing buttons and all the freedom that it can offer and all of that good stuff. But if you don't really understand what is going on, just in this concept alone with regards to value, you're missing it. You're really missing it. And it's so critical. It's helped me so much to be able to put a framework around the market and the order flow. The footprint just puts it all in front of you, puts it all in front for you to see where the players are. We have buyers and sellers. That's it. No reason to make this any more difficult. And we can see where they are, like I said, in strength, or we can see where they are in weakness, and we can see who's dominant at any particular time. And that's absolutely incredible, just absolutely incredible to have such information. So I guess, you know, the biggest thing is this is the first time you're hearing any of these terms or concepts. Don't be discouraged that you haven't heard them before, because I hadn't. And look, I had been around this block for, 12 and a half years and hadn't heard a lot of the terms and the instruction that Kai is sharing with you today. But also I want to say, don't just kick it to the curb and say, those guys, they don't know what they're talking about. This isn't relevant. I have my RSI that I love, and I know what to do when I see a cross through and a this or that, or just whatever indicator is your favorite indicator kind of thing. You know what? The truth is that Kai does know what he's talking about. And the additional truth is that once you begin to grasp how to look at the market and how to read the market, you won't read it any other way. You won't look at it any other way. And if you do like some indicators, that's fine. Just let them be an aid, but let the footprint and the whole NOF concept and theory and so forth be your guiding force, because once again, all I can say is it has just completely turned my trading success 100% around. And for that, I can't thank him enough for developing this. I've been looking for something of this nature. I knew I was missing something with regards to volume and order flow, and I'd been searching for a while, and it was kind of like the student was ready and the teacher came kind of thing, because this wasn't available until the first of this year in this particular form and in the accuracy that Kai has put it together, with the accuracy that Kai has put it together. So that's, the biggest thing I'd like to do is to encourage you to really take a look at this and give it a fair chance. Mm-hmm. Because I can absolutely promise you, you won't look at the market any other way once you learn and understand this.
Absolutely. Of course, I agree, and a few other folks in here agree as well. One of the comments that are coming through about day trading, I actually use this for swing trading as well. I just use the order flow on a longer-term time frame. That's all. I'm looking at this right here, these numbers here, 13 by 26, 13 by 23. Now we're starting to see a little bit of buying come in. Okay, so I'm going to go ahead and do a quick little buy order here. $29.73 on the bid. So I'm on the bid. right now, but we're 13 by 42, 12 by 41, 12 by 41, 12 by 42, 9. We should be going up. It looks like I might have missed my, yep, I did. I missed my fill. Okay, a little late. Okay, never mind. Anyway, the idea here is to find the level. There will be another opportunity for me to get in. I see the sellers coming in a bit here, 5 by 12. So may get it still even, 4, 3, still even. Looking for a real imbalance. Someone that says, okay, 18 to sell, 50 to buy. 17 to sell, 50 to buy. You know, that's what I'm really looking for. That's when it's just going to take off. 21 and 6 to buy, it's no big deal really. Now the buyers are not that aggressive right here. So they're kind of holding back. The sellers are now stepping in a little bit. So they're going to hold it back a bit. See how there's 7 by 37 now? That's a 500% difference. 5 to 1. 3 to 1. 4 to 1. No, actually, I'm telling you guys, this is not the software. I'm just using the stuff that comes for free with the NinjaTraders or NinjaTrader. This is not the software, you guys. No. There's an easier way to read all of this. I'm sorry. I apologize. I didn't want to get you guys too confused. I just wanted to show you that you can find information not within the candlestick patterns and things like that, but within the actual numbers. Because this is the real market. This is not. Okay, let me show you what I've developed. Okay, this.
He's just whetting your appetite.
This here is giving you all the information that you need. And I also have this on a regular bar chart. Let me get it on a bar chart. I believe that's it. No, where did I put it? Maybe I put it on gold. Nope, that's it. No, that was it. Okay, I don't have anything yet on that showing. Okay. Well, what I have on this here is these numbers are basically within. So I'm looking at this. I'm looking at a bar chart or candlestick chart, right? But now the candlestick chart, I'm seeing the numbers that make up how aggressive the buyers and the sellers are. So the same lines that I drew, now I can see where the buyers are getting involved, 78.40, 78.39, and we're currently up here at 32 by 30. And what I want to see is I can now go into a level long. I see now the seller came back in, 33 by 121. That's obviously a much, much larger seller than there is a buyer at that price. And it's eating up the buy orders now. So there was an opportunity to get long and for it to continue. And it stalled, and we could see on the level 2 that sellers were becoming more aggressive. And remember, I was looking for a trade imbalance to the buy side, meaning I was looking for the buyer to be that much more aggressive, and I didn't see that happen. So that gives you opportunity to exit out of a position or to adjust your position, maybe even reverse it. But now it's telling me it's going to come back down to this level, 98.26, that lower level. And I can see ahead of time that there's sellers down here, 13 by 38. It's really 0 into 38, or 13, 10 into 38. Very, very aggressive sellers. Now these sellers are going to become just like those big buyers way up here. They're going to be trapped, and they're going to provide support. So the fact that they couldn't get it going from here doesn't mean anything. It means they're now discounting it lower to get it along from down here. Now, I have a long opportunity from down here and a stop just beneath. So let's watch this information. No, actually, the difference, that's a very, very good question. So the difference now between these numbers and these numbers here, on this side and under here, these are all limit orders. These can be fake orders. So can these. These can be fake orders. But this was one lot at 78, this two lot at 78. That's a real order. These time and sales, these are all real orders. And this is recording all of these real orders, but taking information like, okay, if it's 350%, 500% greater than the other side, highlight it for me, put it in bold, and if it's sellers, make it red. If it's buyers, make it green or blue. So I'm going to go ahead and take a long here. Try this one more time. And I'm going to put a stop right beneath. So let's get long. I'm just going to go market this time. Okay. So I'm long.
I'm short, by the way, Kai, up here from 54.
Okay. Okay, I am long. And my stop is right down here. Now, what I want to do, when I'm long, obviously, I need to see more buyers come in, don't I? So I'm going to look right here. We're at 78.27. I'm at 60 by 76, 60 by 95. And if a big buyer comes in through this tape, he's going to show up, and it's going to be a big green number like this. So I'm only positive 2 ticks right now. And it doesn't look, still pausing. Oh yeah, that's right. We are in the middle of lunch. So maybe that's going to give us a little pause here. But by identifying the value first and then understanding if the market gets too cheap, there will be an opportunity to get long. Now I can actually move my stop up from the bottom here, 78.17, to basically break even. 78.22, because I'm going to hide behind these large numbers right here and these large numbers right here, okay? And very shortly, I'm going to be able to take something off. I'll take partials. So I have 7, 14, 16. Now, if I can continue to see that, well, I also have identified ahead of time possible resistance, which was the value area high, 78.41, right? So now let's look at these time and sales. 78.40.25 came through. Now I see a seller come through, but it's not a block seller. I can see that. It's not a block seller. It's just cumulative. So we'll see what happens at 168. I can now move my stop beneath this 35, 78.29. Okay, I'm up 7 ticks now. I'm going to go ahead and take off a partial. And okay. So 7 ticks on 3. Took off 1. Just continue to work this. There we go. We'll keep going. Now I'm looking for a next place to hide. I know I'm coming up into resistance, 78.41, which is the value area high. All found by just looking at these numbers, right? But this software that I have will actually find that for you. See, there's numbers here of buyers, 78.39. See, there's this band here of sellers. These band of sellers are actually coming from all the way back. Wow, even further. Right here. These very aggressive sellers from 11.12 are going to be resistance when the market gets up here. So the market now, this is the level of buyers. So there were buyers up here. Let's see if they take this higher. But again, I'm still at risk. I'm going to take another piece off, one more contract. Okay, I'm done. I have one last contract going. And notice how when we're coming into these previous sellers from whatever time that was, an hour ago maybe, we're looking for buyers and sellers and seeing what's going on. And if a big seller comes in, I probably want to just bail on the rest of that. 3. But you can use 3, 5. You can do 1 contract if you want, whatever you want to do. Now, I'm not here to tell you how to trade. I don't know the size of your account. What's more important is I identified an opportunity to get long with, it was 1, 2, 3, 4, 5 ticks risk on something as radical as crude. Okay? Now, we're coming through that sell pretty nicely. I'd like to see a big buyer come in and blow this through. Or if a seller reemerges, I'm going to bail. I see there's a buyer up here at 78.48. Maybe this market can connect with this buyer up here and continue it up towards these upper levels. See, these upper levels are previous sellers, and these aren't pivot points or swing points. They're actually taken from, these are large orders that were very, very aggressive, over 350% more aggressive than the other side. And you notice how the market will react to these levels. So I know I'm getting near. We need to right now. We need to push through with a big buy. Otherwise, it's time to bail. But the money management is the risk that I took to the reward. Getting kind of slow. One thing I can do is I develop this pressure tape. This is going to tell me these orders coming through, but only identify the ones that are coming through at the bid or market orders to sell versus market orders to buy. Now, the initial orders are going to be there to eat up the liquidity, the limit orders that are down through here. So I want to see an imbalance of 3 to 1, 4 to 1, 5 to 1 to stay in this trade. And each level I can reset and say, okay, show me that. So I'm saying, okay, well, I'll stay with it a little bit more. 19 by 39. I see this 29 here. We could stay with it a little bit longer. So this is really a way to stay with the trade a little longer, isn't it? Take less risk, stay with your trades longer. Isn't that what it's all about? I think it is. Everyone says it is, but I don't know how to do it. Okay, so some sellers are coming in, aren't they? So I could go ahead and bail on my remainder if I want to, and I actually will. Okay, I'm done. Yes, I can. So let me go through a couple things then to explain what I just did. So there is one of the NOF traders who did this for me the other day. And this is called volume imbalance, showing more aggressive buying than selling. The bid is on the left-hand side. Let me know if you can all see this, by the way. Okay. So the bids are on the left-hand side. The asks to buy are on the right-hand side. Let me get rid of that. Okay. So it says here, more aggressive buyers are in the green, willing to take what the sellers are willing to offer, or buying at the ask. The ask is on the right-hand side of the X, 97 by 89. It says here, in this example, when there is a better than 2 to 1 difference between the ask and the bid, the numbers turn green, giving you a visual representation of the degree in which the aggressive buying or selling, or buying are overtaking the aggressive selling. Now remember, this is just another person who bought the Noft, what, 4 months ago, I believe, 3 months ago, and he has this understanding already. So you're looking at 2 into 24, 17 into 36, 9 into 84, 17 into 63, 30 into 89. Well, guess what? If I see that, I guess I would stay with the trade long, wouldn't I? That can really help. And in addition to that, the one beautiful thing about this is I can also use, see where they start at 36 to go higher? And I get in? Well, I can use this as a stop right here, right behind. One tick behind the initiated. Remember, these are initiated by larger traders than I. So if this larger buyer is buying for whatever reason, maybe they're whatever market you're using, S&P, ZB, fine wine, it doesn't matter, right? If they're buying more, there's obviously demand there, and they're larger than I am. So I should put my stop right behind the initiation of those big, large orders. Because if I get stopped out, my little size, 3-5 contracts, is not relevant. Those will get run over. So if the buyers can't hold the market and continue to take it higher, then that means the other side of the market is is absorbing all the buyers and selling more than the buyers are buying. And so I might as well stop myself out. So that's how you can identify risk levels better. And there's another important aspect is, again, why does a candlestick, why is something like this going to pull back and hold? Is it going to pull back and hold because of a Fibonacci retracement? Is it going to pull back and hold? Why? Why would a market go up and then come back and then stop? Why does the market pull back to here? What holds that price up to the tick? And the answer is large stacked buyers. It's 23, 30, 30, 101. That's what holds the market up, buyers and sellers. How aggressive are the buyers versus how aggressive are the sellers? And if you can identify that, you can, I don't care what time frame you want to take or how much, no matter what you do, you're going to take less risk. And no matter what you do, you're going to have logical, not emotional information to go ahead and get you to help stay with that trade longer. That is it. That is it. And that's what I have in 30 hours of videos going through this. I address everything. And again, this will go back to why am I even doing this? I'm doing this because I'm building a prop group to trade this strategy. All right? Let me go to my last thought. And I know it's the end of the market. So, I'm sorry, end of our webinar, end of lunch. But I want to just show you how I look at the market and how I hope that you will start to look at the market after this conversation. Bill, if there's anything you'd like to add.
Okay, thank you. I'm just
you're still in the trade?
Staying here with you.
Yeah, no problem. Okay, I would like you all. Oh, let me just, you know what? Let me do this for you. Okay. So this is all about decoding order flow. Okay, so the reason why I built this onto NinjaTrader, because the folks that I was teaching and working with, they're strapped already. They've already lost, they've already spent all their money on indicators and mentors. They're tapped. A lot of them were coming to me, their last hope, right? Some of them were willing just to give up trading because they figured out this is just ridiculous. I buy something, it works for just a little while, and I never ever have an understanding. So I searched for the programmer based upon NinjaTrader because NinjaTrader, as I was using it right there, that is free. It doesn't cost me anything. I don't execute on NinjaTrader. I execute on my broker's platform. So you can use this for free. Now, the next level is this is being built onto a professional platform called Trading Technologies. The same, oh, by the way, you can RedBridgeCapitalConsulting.com, Ninja Order Flow Trader, Kai at NinjaOrderFlowTrader.com, Bill at NinjaOrderFlowTrader.com. And, okay, this is how I want you to look at the markets. As a nice, oh, shoot, I'm sorry. I hope that didn't just mess up everything. Okay, good. All right. So the market is like an iceberg. Beneath the surface is where all of the volume occurs. So remember the question about time and sales? Is that showing us everything? And the answer is no, it's not. It's showing you the price action, which represents about 10 to 30% of the market. But guess what? All of the indicators are analyzing price action. Whether it's Fibonacci's, whether it's candlestick patterns, whether it's oscillators, it's all analyzing only about 30% of the equation. And what's amazing is that everyone touts price action, and it's so correct. It's right. It's just not the main story. You have to understand the context in which price action is working. I take 70% of the daily volume from the New York Stock Exchange reports that on average every single day, 62, and I've seen upwards of 92% of the daily volume is controlled by institutions, programs, dark pools, HFTs, iceberg orders, and that is giving you the true value. Swaps, negotiated trades, secondaries, all that kind of good stuff. And they have time. They have about 48 hours till they have to print their order. And we're doing most of our business as an institutional trader away from the current price action. We are calling the desk on the other trader on the other side of the at Goldman or Bear Stearns or Lehman or whatever. Those guys, never mind. Those guys aren't even around. Merrill. We're calling them because we know their position. That is true transparency. And if you don't have that, this is the next best thing. Understand that what you're seeing with the charts, specifically just with the candlestick charts, is about 30% of the equation. Don't make all of your judgment on trades based upon that. And I guess I took a decent stop, right? I stopped out here, came all the way back down to 78.30, and question, why? I'll show you why it came all the way back down here. It's not because of a candlestick pattern or a retracement. Came all the way back down here because all of the numbers all the way up through here were neutral. The first buyer was here, and there was a reaction to the seller, 45 by 19. The second level was here, 2 buyers and a seller. That is a level of which if you sold or you were waiting to add, this would be an opportunity to add. Obviously, looking at this now after the fact, that's easy, right? But when you're in the trade, you want to continue to see aggressive buyers, specifically if you're going through recent or previous institutional selling. So this will help you identify previous levels of institutional buyers and sellers, and then you can adjust your risk accordingly. For that, I thank you for your time. Thank you for your lunch time. I'd like to offer out again if you'd like to contact myself or Bill. I guess I could go through real quick before I do this. I think the next shot is who am I? Why should you even probably be listening to me? Okay, yeah. My name is Kai Whitney. I'm talking to you from my desk right here at home, by the way. I trade from home. What you're not seeing is just I'm sitting in underwear. Not just kidding. but the professional program I went through in October 1999 was with my firm, Swiss Bank, largest investment bank in the world. And this is just to give you the size of the trading floor. This one floor under one roof, this is 2 football fields long and over 1,500 traders. And I went to Bear Stearns, and I had the opportunity to trade for one of the largest hedge funds in the world at that time. And it took me weeks upon weeks to sell and distribute basically the shares. So I have an understanding of what, when I'm looking at order flow, I know what to look for because I've been on that side to do it. Then I took that information to SunGard, Capital Markets, shorted, and here I am today. Okay? And now I'm building, I have something that is of value. I'm willing to share. You can see there are others that are benefiting from it. It's not just me who can trade this. There are others that you can contact. Go to the redbridgecapitalconsulting.com. You can contact bill.bloom.noft. Anyone else? You're more than welcome. There's an FAQ webinar that we did the other day. There's free education on my website. Feel free, okay? Thank you, Bill, for coming in for a moment. And
yep.
The only issue is an interest trader. Yeah, tell me about it. Any last thing that you'd like to add, Bill?
Just like to add, if anybody has any interest in being able to see some examples of how to use this tool, I would be happy to meet with you and go through charts and specifically show you exactly how I use it and exactly how I profit in the markets every single day. So reach out to me at that email address, bill@ninjaorderflowtrader.com, and be happy to set up a time, visit with you.
Excellent. Thank you, everybody. We'll see you next time. Bye for now.
Okay, bye-bye.
Bye-bye. Thank you. Everybody good? Any further questions about data and stuff like that, you can look through my website. I use professional platforms, direct access, to put trades on. There's opportunities to look at that. There's opportunities for funding. Building on the trading technologies, building everything that you see here in the NOFT within the dome of the trading technologies. Okay, so we'll catch you later. Thank you very much. Bye-bye.